Well, the Fed has signalled that they are moving closer to tightening policy, but we think it's still too soon to expect them to announce a tapering at this month's meeting, especially following the much weaker than expected payrolls report for August. While 1 week payrolls report on its own is unlikely to significantly derail the Fed's tapering plans going forward, it's likely sufficient to delay that tapering announcement until at least November or December of this year. And then we're emphasising as well that yes, they are moving closer to tapering, but once that gets underway, it's only going to be a very gradual process. It will likely be carried out at least through the first half of next year. On top of that, we heard recently from Fed Chair Powell at Jackson Hole Conference, and his main message there to market participants was that yes, the Fed is moving closer to tapering QE, but they still remain far away from starting to raise rates. That's going to be a very different decision and will require much further progress yet for the US economy going forward. So his message to markets is don't get carried away about rate hikes at this point, and that it's going to be more of a story really for markets next year. Well, the shift to tighter Fed policy should encourage a stronger dollar, especially against the low-yielding currencies such as the euro and Swiss franc. However, we don't think that will be the case against the yen. The yen, we feel, is already deeply undervalued, and that will limit the upside potential for dollar-yen going forward. On top of that as well, we feel that conditions aren't as favourable for a significantly stronger dollar on this occasion, not like what we saw back in 2014 and 2015. On that occasion, while the Fed started to raise rates, other major central banks were still lowering rates or even still expanding their balance sheets. So that led to a much greater policy divergence, which encouraged a much stronger dollar. Fast forward to today, and the situation is very different. While the Fed is on course to start raising rates from late next year or 2023, other major central banks are also expected to raise rates going forward. In fact, central banks such as the Bank of England, the Bank of Canada, the RBNZ and the Norges Bank, we feel they will raise rates before the Fed. And even those central banks which are lagging the Fed, such as the ECB, the Riksbank and the RBA, they've at least signalled that they will slow down the pace of quantitative easing going forward. So when you take that all together, we don't feel there's as strong justification for a much stronger dollar from current levels. And finally, we have to take into consideration as well the valuation of the dollar on this occasion is very different to what it was prior to the big rally before 2014 and 2015. This time around, the dollar is starting from a much more overvalued level, which leaves much less room for the dollar to strengthen further. So in our view, we feel that the scope for the dollar to strengthen much further from here is much more limited.